In the energy quadrant, the natural gas rally in the June futures contract pauses, dropping from a 4-month high. And it's interesting the way the session played out today, because we actually gapped lower before making that 4-month high today. Natural gas hit the highest level since January 18th at 2.924. That was up 2.89%, but before dropping all the way to 2.640, which was down 7.11%. There's still some time left in the session, but as of late afternoon, we are down about 5.25%. Overall, however, natural gas has only closed lower in 2 of the last 9 sessions and is still working on its 5th consecutive up week, although it has given up over 8% from its high and over 10% from last week's close, with 2 days of trading left because we gapped open versus last week's close. So still positive, but it's given up a lot. National demand coming up will be a mix of warm and hot temperatures across the U.S. That's going to put demand in this sort of moderate level box. The southern 1/3 of the U.S. is going to remain very warm to hot, with highs from the mid 80s to the mid 90s, except for Texas, where those highs are going to hit the mid 90s to the low 100s. That's going to be a pretty dramatic spike in demand in that area. The northern 2/3 of the U.S. will be nice, with highs from the 60s to the 80s, except for the Rocky Mountain region, which could see highs as low as the 40s to the 50s. All of that equals moderate demand for the next 7 days or so. Now, we did get the natural gas storage report today. Today's EIA report printed a build of 70 billion cubic feet. That's lighter than market expectations of 75 billion cubic feet and slightly smaller than the 5-year average of this time of year of a build of 90 billion cubic feet. That build dropped surpluses to 620 billion, but also increased supplies from 2,563 to 2,633 billion cubic feet.